Good morning, everyone, and welcome to the December 2019 market outlook. And so we've just finished on Friday, the last trading day for the month, and so we can look forward to what is going to happen and review what has happened already for November and looking back towards the full year for an idea as to what we can look forward to in December and looking outward into 2020. So let's get started. And we've been talking all week about this developing range that we have at the very top of the short-term range. You can see we have a very clear uptrend, lots of bullish momentum. You can also see here, very well clearly defined, this 31, almost 29 level. So these are the levels that we have to keep in mind going forward as the market continues its advance, because it is always healthy for a bull market or for bullish momentum to periodically check back to ensure that it has the support and buying demand to justify that advance. And so earlier on in the week, we were talking about the fact that at the very highs of this range, we were developing a new area of consolidation between 3040 at the extremes and 3155 at the extremes. But for the last couple of days, that range has even shrunk even further from 3140 to the extreme to just about 3151 at the top. Note that we did say that given that it was a shortened trading week and there usually is lower volume, which means lower participation in the market as a result of more people being off and not engaged, moves tend to be very spiky. And by spiky, I'm referring to the fact that they move very quickly in one direction, but tend to reverse as well. You can see a clear indication of that happening as we opened on Friday after having tested some overnight lows here at 3140. We trended all the way up, tagged 3150, and sold off basically for the rest of the day, holding this level once more again, which is very important. We held the bottom of the range, which means that buyers came in to ensure that we closed above that. So what does this mean? What does this mean for us going forward? Well, given that buyers showed up at this level, we must again begin thinking 3150 will be test at a minimum, so we can able to establish what direction exactly the market wants to go. Do we continue going up to the upside to at the very least test 3155 and beyond, or shall we go back down to these levels that we've identified, 3132 and lower? This hold of 3140 is a very important clue going forward. The fact that we've held here tells me statistically, at the very least, we're going to retest this 3151 level, possibly the 3155. Now, seasonally, we're entering a very bullish time, which means going into the Christmas and the end of the year period, there usually is a lot of momentum that comes in to cause the markets to go higher. So, how do you plan to take advantage of this? Well, if there is any dip, if there is any weakness that comes in to test any of these prior levels that we identified around 3129, we have this level here at 3120. I don't believe it's going to get all the way back down to 3115 or 3117, but it's very possible. Who knows? If any of these levels get tested, that is a good opportunity for you to begin positioning long, to take advantage of the bullish seasonality and the clear price structure and demand that has been coming in at these levels to support and push the market higher. So let's take a look at some other indices and see if there is any continued clues that are telling us, yes, we are to the upside. Almost the very same pattern in the NASDAQ, where we've broken from lower levels You can see here, very, very, very nice areas of consolidation that we have now cleanly broken over, a gap up, trend A, continue to trend, and now we're about to possibly form a developing range just like on the S&P 500. Let's take a quick look at the Russell 2000 index, which to me, of all the indices, has been the most proven to be the most indicative for what is to come and how the evolving setup continues to lean bullish. And let me show you exactly what I mean by that. If we zoom out to a 1 year daily chart, yes, you can see it here as well, but let's try the weekly first. If we zoom out to the weekly, what you can clearly see beginning to happen here in the Russell is we've been in this sideways consolidation. Let me highlight that for you guys. We've been in this sideways consolidation for quite some time now. That is very healthy action. What it means is that buyers and sellers for quite some time have agreed on price. They have essentially established a very wide value area between the lows here at 1450 and the highs here at the extreme at about 1612. And so when you begin to see price move out of that region, be prepared for a very aggressive response and reaction. That is to say, buyers can come in with great ferocity, pushing price to the upside, or sellers can come in and take advantage of the higher price that they have not gotten for quite some time and push it aggressively down. However, given the bullish seasonality, given the strength that we've seen in the market, given that this has chosen to break to the upside versus to the downside, as it had ample opportunity to in these three small bodied candle weeks, price chose not to do that. We broke to the upside. I would definitely keep an eye on the Russell as a leading indicator as to whether bullish momentum and risk on sentiment continues to be pervasive in the market. That being said, let's take a quick back to the ES for a moment. I began speaking about the fact that usually, statistically speaking, when we have what is known as a trend day, as we did on Monday, we open essentially at the lows and we close at the highs. That signals in the near term more upside. In the very short near term, as you can see here, we gapped up and then we sold off slightly into support. So what can we look for going forward into December and to next week in particular? Well, look at the close that we've had here. We've had a very bullish close near the highs. And so extrapolating that forward, we can possibly look for a new high being set above 31.55 and possibly some sideways price action to develop value and then higher into the rest of the month. Again, I continue to advocate when prices are high, when volatility is low, it is the best time to begin purchasing portfolio insurance. I shall be going into that in more depth next week, so you guys can stay tuned for that. Thank you for joining me for the Island Mint Island Insight Market Outlook. Have a lovely weekend